And to push silver below $30, it was, this is what they've been trying to do. And I think you'll see it turn right back around because all of those short positions get covered and it goes right back around. What you will see is massive managed money selling and commercial banks taking the other side of that and going long. And, this is an environment where this is as big of an opportunity as I think you'll ever find in precious metals because nothing has changed whatsoever. Nothing has changed. And the commercial banks and the bullion banks and the central banks are doubling down what they're buying. They're doubling down their efforts and they are using the stupidity of the Western suppression of the paper markets to do just that. So, but I do think that for the most part, if I had to bet, the worst of the drop is behind us now that we've broken below these numbers. Those short positions will have been covered, and I think you'll see the market turn up from here.
In today's news recap, gold price sharply down on Fed's surprisingly hawkish pivot. Gold and silver prices are strongly lower in early U.S. trading Thursday, following a surprisingly hawkish turn from the U.S. Central Bank Wednesday afternoon. Gold prices hit a 4-week low and silver prices a 3-month low. February gold was last down $39.10 at $2,614.20, and March silver was down $1.12 at $29.61. U.S. stock index futures have rebounded, and U.S. Treasuries have steadied overnight after the Federal Reserve's surprisingly hawkish pivot on U.S. monetary policy Wednesday afternoon. While the Fed announced a 25 basis point interest rate cut as expected, the FOMC's quarterly summary of economic projections showed the majority of FOMC members now expect just 50 basis points in rate cuts in 2025. That's a major change in the FOMC's thinking since the last dot plot meeting in September, when the FOMC forecast was for 100 basis points in rate cuts in 2025. The hawkish pivot sunk precious metals, saw a big surge in the U.S. dollar index and in Treasury bond yields. Fed Chairman Jerome Powell said in his post-FOMC press conference, "This is a new phase where inflation concerns are back on the table." While the new policy setting is still meaningfully restrictive, that's what it needs to be because inflation remains above the 2% target, he said. "We still have work to do to bring down inflation," said Powell. Asian and European stock indexes were mostly lower overnight. U.S. stock indexes are pointed toward firmer openings when the New York day session begins, on a modest rebound following Wednesday's sharp sell-off that pushed the S&P 500 futures to a 6-week low, saw the index suffer its biggest Fed decision day loss since 2001 and the biggest one-day loss since the pandemic in 2020. Meantime, a stopgap U.S. government funding deal has fallen apart following opposition from President-elect Trump, increasing the likelihood of a government shutdown this week. If the debt ceiling isn't raised and the U.S. government shuts down, that would definitely lead to chaos, said a Bloomberg report. U.S. equities may be hit, but any spike in U.S. yields may drag down rest of the world, said the report. Now we'll show you more clips, but first, smash the subscribe button and check the pinned comment to get yourself the best VPN deal on the market. You'd be crazy not taking advantage of NordVPN to safeguard your privacy at these prices. Enjoy the episode.
This is a risk-on environment until it's not. Maybe another day or two like this will change. Hey, knock it off. I just got a puppy. I'm sorry, you guys, and the puppy and the other dogs are getting to know each other. Of course, no one's home right now, so I'm stuck with all three of them. I apologize, and that may happen again, so I'm sorry in advance. Look, I think in the end, guys, metals are going to go a whole hell of a lot higher. This was something I think, that we should have expected. This is a market where we had massive short positions in London and in the US by the commercial banks that were hugely underwater. And I think they use this optimism as an opportunity to right their balance sheet and to push silver below 30 bucks. It was, this is what they've been trying to do. And I think you'll see it turn right back around because all of those short positions get covered and it goes right back around. What you will see is massive managed money selling and commercial banks taking the other side of that and going long. And, this is an environment where, to me, this is as big of an opportunity as I think you'll ever find in precious metals because nothing has changed whatsoever. Nothing has changed. And the commercial banks and the bullion banks and the central banks are doubling down what they're buying. They're doubling down their efforts and they are using the stupidity of the Western suppression of the paper markets to do just that. So I would say that this should have been expected, maybe not as severe as we thought. But I do think that for the most part, if I had to bet, the worst of the drop is behind us now that we've broken below these numbers. Those short positions will have been covered, and I think you'll see the market turn up from here. More acute in silver than it is in gold. And if you look at the stockpiles of the metals that are being held at the LBMA, at the COMEX, and even at the Shanghai Metals Exchange, they are drawing straight down. And what's different now over the last few years, and I would say it started really in 2020, than any time that people have been following this market. And look, I go back to 1990 following this market. That's when I started in this industry. For my entire career, no one stood for delivery. Never. I mean, less than 1% of the contracts did. But this is what's different now. And these countries are smart enough to be methodical about it. So they're standing for delivery. They're draining the LBMA. They're draining the COMEX very slowly, very methodically. If you do it too fast, you get a force majeure. You get some sort of a default and the whole thing blows up. You cut off your nose to spite your face. Instead, they play the game with the West. And the game that the West has played is to support the illusion of the strength of the bond market, the strength of the currency. And they never counted on these countries being coordinated, sophisticated, motivated, and wealthy enough to stand for delivery, but also smart enough to do it in a methodical fashion to not raise the red flag fast enough. But I think in the silver market, look, there's a 4 to 6 billion ounce shortfall in London. 4 to 6 billion. That's why they tried so hard to drive the price down here into the end of the year, closing out the stops, letting their balance sheet kind of level off, and they'll take the other side of that. And there's between 700 and 750 million ounces short on COMEX. Most of this is naked, meaning there's nothing behind it but a big checkbook. And so they've been able to keep the game going for a long, long time, but it ends when the rest of the world continues to buy metals because they don't want our treasuries anymore. So when you asked me earlier about what I consider to be financial warfare, the supposed tariffs, they're not, they're sanctions. This is exactly what will continue to make these countries want to continue to use the Achilles heel of the West against us, the short positions on these commodities and the delivery availability. So look, they have enough money to blow it up all at once, but then the game's over. So they're slowly draining the exchanges, not so fast that the whole game ends, but fast enough to see a massive drawdown. You look at the LBMA stockpile of silver, it's a 45-degree angle, and it's falling in on COMEX too. Gold a little bit slower, but it will happen the same way. And I think what will ultimately happen is that the exchanges in the East will take over for the COMEX and the LBMA. They will be rendered a scam. They will be rendered a fractional reserve system. We're not there yet, but I think that there's no question that they understand what we're doing, and they understand the way to win is to use that leverage against us and to do it in a way that doesn't, or allows them to continue to do it as long as possible. That's why they're not bitching. They're not bitching because they understand, but they're the ones accumulating, and we're foolish enough to let it go at stupid prices.
In today's episode, Andy Schectman dives into the art of stacking gold and silver the right way. He emphasizes that successful stacking isn't just about accumulating metals, it's about a strategic approach that ensures long-term security and financial resilience. Schectman stresses the importance of prioritizing physical metals over paper-based assets, noting that true wealth lies in tangible ownership. He also highlights the value of balancing gold for stability and silver for its growth potential Financial, helping stackers build a well-rounded portfolio to withstand economic challenges. Schectman shares his bullish outlook on precious metals, citing critical macroeconomic factors like rising inflation, unsustainable government debt, and the global trend of de-dollarization. These, he explains, are driving demand for gold and silver as essential hedges against economic uncertainty. He is particularly optimistic about silver, praising its unique dual role as a monetary asset and a key component in green technologies like solar panels and electric vehicles. With industrial demand poised to surge, Schectman believes silver's potential is unmatched. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment. We're offering a big discount in NordVPN, which is an essential tool if you want to browse the internet in a secure and private way. For just a few dollars a month, make sure your privacy is never compromised.
And look, I mean, I'll go back to 2019. Why the hell would the BIS have reclassified gold the only other tier one asset in the world? Why? They wouldn't have unless it was important. Why are all the European banks accumulating gold? And as a percentage of gold to their GDP, it's almost identical. It's almost like they're preparing for a gold revaluation. And look at the amount of gold that all the BRICS nations are buying. And I think that's prerequisite for a seat at the table. And being let, I mean, Saudi Arabia tried to buy it without reporting to the IMF. China's been doing it. And buying all the doré, being less than forthright. Russia's not telling us. China's the second largest producer of silver in the world and now a net importer after being a net exporter. If the People's Liberation Army buys instead of the PBOC, they don't report it. The doré and concentrate's not reported. You know, I just happen to think that these countries are putting a floor for sure under the price of gold and silver, and it's been admirable, if you will, in the way that they've constructed it. I mean, they're continuing. I mean, look at India. India's buying record amounts of gold right now, and they've bought over 900 million ounces of silver in the last 4 years. That's more than that's on the LBMA. So, you know, when you talk about putting a floor under it, you're absolutely right. Now, I'm not saying that this is going to hold through the night because the bullion banks are pretty tough, but gold's up $18 right now in the aftermarket after getting hit. This is just another way for these countries to go ahead, hit it. We'll stand for delivery. We'll push it right back up, and we don't care what you do with the price because in the end, we're going to take delivery, and that's how they win until they no longer allow deliveries, and that's when the exchanges move eastward. And it's funny because the BRICS grain exchange, which it's a good analogy. You know, the guy that's developing it said, you know, we consume and produce more wheat than the West does, but we don't control the price. It's done on COMEX. But when the BRICS grain exchange is completed, that will change. And now they're talking about a BRICS metals exchange. They understand that the COMEX controls the price and that it is the tail wagging the dog. And so they're using, if you can't beat them, join them, fine. So do the same thing. And that's what they're doing. And standing for delivery is how you beat them. And you join them in not complaining about it, maybe even shorting the paper price yourself. And I think that's the game that will happen until it doesn't. And look, if the central banks weren't buying to the degree that they were, then you might have reason to be slightly concerned. If gold hadn't been reclassified the only other tier one asset, I would be less than confident as I am. And I just happen to believe that this is a long game that is being perpetuated against the West, and we're stupid enough to play into it. And people are too obsessed with other shiny things to notice it's happening right out in front of us. And, you know, it's easy for me to talk about this in a market that doesn't hold Bitcoin's jock in terms of its performance. But in the end, the central banks are buying precious metals, and you don't hear about them, some of them, but all of them. You don't hear about them building Bitcoin strategic reserves like Trump is talking about. But what's the one thing that even Cynthia Loomis, the congresswoman from Wyoming, talked about in her bill that's been submitted to fund the strategic Bitcoin account is to revalue the price of gold, and to do so with some of the profits, use it to buy the Bitcoin. It's the same thing the head of the Dutch National Bank is saying. And I guarantee you, when you look at the amount of gold that's evened out across the entire European Central Bank balance sheet complex, that's all almost exactly the same in terms of relation to gold to GDP. It's as if they are preparing for some sort of revaluation. So it's not that I'm a Bitcoin hater. It could very well be an asset for the state, but it won't back a currency system because it's too volatile. That's what gold will do. And so ultimately, this has to be done in a slow, orderly fashion, and that is what is happening. And silver will come along for the ride. It won't be linear, and it'll probably be far more violent in its move, and it will happen when people least expect it. We'll all expect it because we've seen it, but it'll catch the majority of the investing world completely off guard because they don't legitimize what's happening, no matter how blatant and obvious it is.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.